The question about the COVID-19 infections in China, small by comparison, global comparison, but there is a pretty significant lockdown now in the city of Shijiazhuang in Hebei, 11 million people. There have been pressure, there has some pressure from the local governments to restrict people's movements ahead of and during the Chinese New Year festival, and of course a lot of shopping is done. To what extent could this be a dampener then on China's consumer sector?
Thank you, Tom. So we have seen such resurgence of new cases across different regions throughout the country in the year of 2020. But luckily, I think the Chinese government has dealt with it pretty well, I would say. The tricky thing is that we're going to the Chinese Spring Festival, which usually is the heavy season for a lot of the consumer goods sector. For example, baijiu, the restaurant sector, etc. So I think the lockdown in Shijiazhuang could potentially impact the consumption during the Chinese New Year period.
When do you expect, all that aside or taking that into account, when do you expect China's consumer to get back to pre-pandemic levels?
If you look at the national statistics data, the Chinese retail sales growth has already back to normal in September of 2020. So in general, I would say the consumption has already been back to pre-pandemic level since Q4 of 2020. Even for the most hit restaurant sector, the restaurant sales has already back to normal in November. So I think the Chinese consumption is already back to pre-pandemic level at the end of 2020. And going into 2021, we are actually seeing that the consumption growth could grow even faster than GDP growth.
How broad-based is that, though? What parts of the consumer sector are firing on all cylinders? I know auto sales, for example, are very strong. Other parts, though, the consumer sector not so strong. How does it all break down?
If we break down among different sectors, obviously the food and beverage sector is seeing the fastest recovery in the second half of 2020. Most of the consumer staple companies already seen their earnings back to positive territory in the second half. Some of the staple companies even see the earning recovery happening in the second quarter. For the consumer discretionary companies, you mentioned about auto, but we are also seeing a broader recovery happening in home appliances sector, sportswear sector, etc. And restaurant sector, we are seeing a broader recovery probably in the first quarter of 2021.
What's the earnings outlook for the consumer sector?
We are positive towards earning outlook in 2021 because the broad recovery we are anticipating for 2021.
Okay, is it more driven by fundamentals or multiples? Earnings per share or multiples?
In 2020, I think the consumer sector has experienced a very substantial re-rating, especially for the Asia onshore market. Going to 2021, I think the share prices will be mainly driven by fundamentals instead of valuations.
Okay. What parts of the sector are valuations looking most attractive to you?
We think some of the consumer discretionary sector are looking very attractive to us. For example, I mentioned about major home appliances sectors, which was mostly hit in the first half, but as I mentioned, the earnings are coming back in the second half, and we are seeing consolidation accelerating in the major home appliance sector as well, and the valuation is becoming relatively more attractive than the Asia consumer companies. For the Asia, we're actually seeing a lot of low-quality consumer names are trading at very cheap multiples compared with Asia market.
You talk in one of your reports about the property sector upcycle. What is that doing as a catalyst for some of these parts of the consumer sector?
The property upcycle, obviously, will have a very positive impact on the major home appliances, especially for some categories which are highly linked with property upcycle, for example, kitchen appliances. And that sector we think will be positively impacted will be the furniture sector. Obviously, this sector has seen a broad recovery in the third quarter of 2020.
Export demand was very, very strong, a key driver of growth for the Chinese economy in 2020. What does the export demand picture look like for 2021, and how is that factoring in to the consumer demand that we're seeing here?
Our economy is actually projecting very strong recovery in export sales in 2021, mainly driven by the demand recovery in the broader economy globally. But having said that, we are seeing the Chinese manufacturers becoming even stronger in terms of managing their supply chain. I think part of the reason is because China is one of the first few countries that are back to the normal production activities in 2020. So we think the export sales growth will be very strong, especially for some specific categories such as home appliances.
What parts of the consumer sector do you think are worth avoiding, or at least you would caution against having too much exposure to at this point in the economic recovery cycle?
We are actually cautioning investors to avoid some companies with extremely high multiples because we feel that the investor expectations towards some of the high growth company expectations are very high. Multiple are getting very expensive, and those sectors we are asking investors to avoid. Another sector we are asking investors to avoid is probably traditional grocery companies because the very fast penetration of e-commerce as well as the highly competitive community group buying format, which obviously is a very hot topic nowadays.
Does the regulatory focus on some of those tech companies change the way that you're thinking about groceries, this crackdown on some of these e-commerce companies?
We don't really think the trend will be changed by the changing regulations. We have seen regulations happening across different other categories. For example, in 2018, we are seeing regulations in education sector. So we're not really surprised to see these regulations. I think going forward, e-commerce penetration will definitely go up for grocery sector because consumers have changed their consumer behaviors during the pandemic. The question is, which company will be leading this trend?